Hello, good afternoon, everyone. My name is King Leong, the head of FinTech at Invest Hong Kong. So thank you for joining us at this exciting webinar where we will uncover the secret sauce in the blockchain investment space. So we actually have three very distinguished speakers with us. Dan Chow, Managing Director, FinTechHK Capital. We have Sam Ditkoff, Growth Partner at Blockstack, and James Chu, CTO at Platon. Now, actually, before I start to introduce and invite our three speakers to introduce themselves, their background, investment thesis, and so on, I just want to put today's discussion in context. Now, if we look at, for example, Cyberport, which is the largest, I would say, community of fintech companies in Hong Kong, of the 600 plus fintech companies in Hong Kong, actually there are roughly 380 residing at Cyberport. Now, in a recent breakdown of the companies at Cyberport, actually, blockchain and crypto is the largest segment among all the other fintech segments, and actually it ties with like wealth tech and also the payment side as the three of the largest segments, over like 10%, of all the companies there are actually doing blockchain and crypto. Now, but at the same time, oftentimes we talk to folks about, I think, blockchain. Many folks are still wondering, so what are the use cases that are able to get a lot of traction? So obviously, I think getting started is fine, but how can we go further? So without the big use cases, broad adoption, I mean, it's not going to go very far. So that's why we are just so excited that we have three gentlemen who have a lot of experience in this space, particularly for FinTechHK, which is a very active investor in this space, in which they are able to share with you the whole spectrum of investments and all the interesting things happening in domain. So without further ado, I'd like to first introduce perhaps DC from FinTechHK Capital to say a few words, to introduce himself and also the company and the investment they've been making. So DC, after you.
Thank you, Ken. Hey, everybody. This is Dan Chow from FinTechHK Capital. We've been in the space for over 6 years, actively involved in the blockchain and a broader space. In total, we have invested in around 200 projects globally, deployed over $200 million. Our investments since day one is very global. Now we run 2 funds. AUM around $150 million US. It's a good opportunity to share with everybody here, and great pleasure.
Great. So, Zen, would you like to say a few words?
Yeah, absolutely. Thank you, King. As King mentioned, my name is Zen Ditkoff. I was one of the first-time employees at a crypto project called Blockstack from the States. Blockstack's a decentralized open source network for building applications, products, services, and ultimately a different model for the internet, one where users can fundamentally own both their identities and their data. The project was originally founded in 2013 by 2 Princeton distributed systems PhDs. We have a little bit of a different path we've taken from a lot of the crypto space, where we kind of went through the traditional Silicon Valley route initially, went through Y Combinator back in 2015. Our initial kind of seed investors are folks like Union Square Ventures and some traditional venture in the States. In 2017, we launched the first version of our network and conducted our first kind of token sales. We did a Reg D sale in 2017, and then in 2019, we became the first crypto project to be approved by the SEC to do a Regulation A+ token offering. Through that, we also did a Reg S on the side. We were able to get some great investors on a much more global scale, folks like FinTechHK, SNZ Capital, Spartan Capital, Zen Fund. And with that, we really started to kind of focus on this area of the world a lot more, which arguably for crypto kind of is the most important markets. My kind of role for the past 3 years is I've been mostly based in New York, focused on growing the independent ecosystem of applications built on top of Blockstack technology. For the past year, the focus has been very specific to Asia and also some of the infrastructure, some of our things like mining on our network. And so as part of that, I'm actually in the process of creating a new company, founding a new company here in Hong Kong that's going to be focused on development and adoption of Blockstack technology in Asia.
Well, this is fabulous. I'm sure that the audience would like to hear more. So we will get into the details shortly. So perhaps I'll invite James also to introduce yourself and about your company. James, up to you.
Hi everyone. My name is James. I'm working for Platon. So myself was a technical IT person from the traditional financial industry, was in the UBS Securities and Morgan Stanley Securities, was observing the traditional trading platform changing from phone call, place order, till now the algorithm trading. So it's a dramatic change. The Platon company I'm working for is focusing, we think it's a brand new generation of blockchain industry. We will open the door for data. So blockchain itself is actually as a distributed ledger technology. It's a ledger, very good for settlement, clearing, for the trust of transaction, etc. But on top of it, we use privacy preserving computation algorithms to protect the data. So data could have value. And on top of protected data, we introduce AI model to generate a new value. So it's a new type of a blockchain firm. We are going to build up a new ecosystem. Thank you. Back to you. Thank you.
Okay. Thank you, James. Now, so perhaps I want to just make it more punchy, more dynamic in our dialogue, and we can perhaps start with DC again, because obviously I would think that some of the folks on the webinar might be people looking for funding. So I would think that they might be interested to find out a bit more about the investment thesis, maybe the ticket size and various details about how you invest in this space. So DC, can you share a little bit more about your investment strategy?
Thanks, Ken. Yes, our strategy, it's more like ecosystem driven. We see the blockchain space is now at the time very similar to the internet technology early around the year 2000. In many ways, maturity of the technology, application, commercialization, etc. So our strategies focus on more on three broader areas. One on the tech layer to encourage the innovation in the tech space, and secondly on the commercialization layer, trying to bring the blockchain technology into mass adoption. And thirdly, as many of you have mentioned earlier, blockchain and crypto always go hand in hand. We see crypto emerging as a new asset class, getting welcomed and accepted by more and more mainstream investors. So the third area of our focus is in the crypto asset area. We invest both on the infrastructure and also all the financial services built on top of the blockchain technology. Check size wise, we are very flexible. It's case by case. The smallest check we wrote last year was $200,000 US, and the biggest check we wrote was around 100 million US dollars. This space, the blockchain space, is still very early. It's very difficult to say you cannot find a like a very specialized area like in traditional VC, but in general, we are looking at the blockchain space and the crypto space as a whole, and have been very actively looking at new projects. Even though many people know that the blockchain space has went through a cold winter for the past 2 years, we were still very optimistic about the future of the blockchain technology itself and the disruptive forces it may bring to us and the benefits it can bring to the general public as a whole.
Great. Now, I guess, again, I'm trying to put myself in the shoes of the audience. So I'm just curious, if you were to just pick out your most successful investment from a sort of return standpoint, so what would that be? So can you sort of describe a little bit about, you may not need to name the name, but can you just share with the audience about the characteristics about what made that investment so profitable, so successful?
Thanks, Keith. That's a hard question to answer. So far, we have invested around, like I said earlier, 200 projects. Many of them are very excellent projects. If I have to choose, I think in each area, I can name one or two. On the tech layer, our earliest and our most successful investment was Ethereum. It's the operating system for the entire blockchain space. It's successful both in terms of like returns, but also its achievements. It's like the Windows system of the internet age. That's in a tech layer. On the application layer, I would say Platon. They are specialized in the privacy preserving or multi-party computation area, which can be used to enhance the privacy concerns in not just in finance, but in many other areas that deals with the sensitive data. On the crypto space, one of our recent portfolio company, BlockFi, you guys might have heard of it. It's a US company. It specializes in crypto lending. It's one of the leading players in the space. They are doing crypto and fiat lending under a compliant and regulatory compliant scheme in the US. Also, you guys know Blockstack. They are their first US SEC approved token projects. So it's hard to pick only one. So I have to choose one from each category.
No, I think this is great. I'm just trying to get the sort of the essence, right? Because obviously, I think the audience would like to see if they were to raise money, then where would they want to place the bets? Now, I guess maybe we can quickly change gear, because I think Zan also has some excellent experience. I haven't seen sort of both sides of the fence, right? You've been very active in the US, having gone through the whole SEC routes. You also have been working in Hong Kong. So I suppose you also talk to our friends over at SFC. So if you were to sort of share, because obviously this is a space that is still kind of like in gray areas, or for a lot of folks, it's still got like, well, it's still regulated. So how should we deal with the regulators? So can you share a bit of perspective? Because I think you have this excellent perspective from these two major jurisdictions.
No, definitely. I would say I'm still, in the early phases of kind of the relationship with the regulations here, still in the process of kind of setting up the new company, but they are very different. And I think for anyone thinking about creating something new or founding a company in the crypto space, where you kind of base your operations jurisdictionally can be almost as important as a consideration as, you know, your product itself. And so that's definitely something to keep in mind. In the US, you know, we did take quite a different approach from most of the other, our other peer projects at the time. Back in 2017, there was a lot of, you know, we'll either blacklist the US or, you know, we'll hope the enforcement won't be too bad and we're just going to do this offering. We kind of made a decision that we were going to go through the hard work of trying to do a compliant offering. It took 1.5 years, essentially, from inception to getting qualified. It was not cheap. I think it was, you know, 1.8 million all in, including legal fees and everything. You know, that being said, I certainly think it was worth it, but it is a testament to how restrictive the environment in the US is. And, you know, right now we're still in the process of kind of transitioning our token, the regulatory status of our token just within the US to a point where it's considered a full utility and is able to be listed on exchanges like Coinbase. Internationally, of course, it is a utility legally in pretty much every major jurisdiction, tradable in Hong Kong, you know, on Binance, as with, you know, anything else. And I think actually that description right there encapsulates perfectly the difference between the two environments. Now extend that out to everything. You know, my background with Blockstack is, you know, very growth oriented, but it is very much also being kind of standing between the engineering team and folks looking to build with the technology and you know, found something. And so with that, you're just much more restrictive to how you can both incentivize and support them to do that in the US. At the end of the day, I think one of the breakthroughs in this space is the idea of a token as an economic coordination device. We've potentially found a way to solve or partially solve the tragedy of the commons. You can't really use that tool in the way that it is meant to be kind of most powerfully used in a lot of cases based on kind of regulation, and things are changing a lot, and I'm pretty hopeful for the future there. But, you know, I think Hong Kong in kind of juxtaposition is much more open. You are kind of able to, they have a much different regulatory eye on these things. But the thing is, whether you're based in Hong Kong or the US, you know, you're going to be spared a little bit depending on where your options are. But regardless, this technology and everything we're building is fundamentally global. And so you're going to touch it in some way, shape, or form. You know, I think my advice there would just be, I think it's shown it really doesn't pay to try to skirt these regulations, but they kind of have to be a core consideration for when you're thinking about the product you're building and who it's going to serve.
Great. You know, I think this is a great insight, because we are oftentimes working for the home governments. We have been sort of, in a way, spending most of the time understanding the SFC perspective. You know, every now and then we talk to folks like in Switzerland, you know, maybe some people from Malta, you know, but then I think the US is always like, you know, sometimes it can be a bit mind-boggling, right? Because there's been so many regulators.
I've spent my whole life in the US and I find it mind-boggling quite frequently as well. So you're not alone there.
Yeah, so that's why I think sometimes we take things for granted in Hong Kong. Well, and anyway, I guess I would like to quickly change gear now, because I still remember I had this conversation with someone not tech over a year ago about blockchain. So I think the perception for those who are not in the space, thinks that blockchain by itself is very safe. So obviously, I think it's not exactly true. Now, and then obviously for James, I mean, you guys have been putting a lot of engineering powers now behind, you know, this whole data privacy protection. Now, again, so treat me as a baby. So this is like, to me, so blockchain, you know, privacy protection 101. So can you explain a little bit about how you approach this and how is your technology so pioneering compared with other techniques out there in the marketplace? So James, after you.
Thank you, Ken. First of all, let me echo DC mentioning blockchain as the windows of the internet. So the blockchain is really an infrastructure. As you said, it's pretty safe based on the cryptographic methodology, protected signature, and all this public key, private key pair, etc. But our view on this is blockchain as a fundamental infrastructure as one wheel, but one wheel is difficult riding, right? So it has to be adding value as an infrastructure. So on top of it, we have two other wheels. One is the privacy preserving stuff, and additionally there is an AI wheel. So three wheel will be a pretty good. You could ride very safely. I think on the why we focus on the privacy preserving front is because the data, we are entering a digital era. Consider this kind of cloud computing, big data, artificial intelligence, all this kind of new technology, they are dealing with data. And data, if there are amounts of data to a certain level, it becomes a data asset, no longer a simple message. So we were considering raw data as a simple message carrier, just the information, right? But now they are becoming digital asset based on this AI, etc. Right? Then we try to protect those and get those into a asset. So the privacy computing algorithm will be the main factor behind of this. We spend a lot of efforts on, first of all, sponsoring all these high-level cryptographic global meeting seminars, and we also organize a few in mainland China as well. And we found those experts or those professors who are very good at theoretically as cryptographic, also hands-on with good algorithm engineering capability. And we have a pretty good engineering team with a bunch of PhD working on this to make the algorithm faster, to make it more secure, to how to say we are aiming to make it commercial useful. So that's why we spend a few years already, at least 3 years. And we also published, I think if people interesting could find out, there is a GitHub open source called Rosetta, which is an open privacy computing framework, could wrap up TensorFlow. If you have already got an AI model based on TensorFlow, you could very simply switch to a privacy computing AI model. So help people to protect your data, to translate your data from simple information carrier to data asset. Yeah.
Great. Now, I think just to help me and also the audience to understand better. Now, I think it sounds, I think I got it. Maybe I guess I lied. I probably got like 50% of what we just said. Now, but I think another way to really sort of put what you do in perspective is, so who are your clients? So, and then who, on the face of it, I'm thinking, well, obviously maybe the crypto exchange guys, they will have the incentive to employ something like this. But I would think that it has to be beyond that, right? So who are your clients?
Yeah, it's a very good question. So the client, for example, in a very straightforward, simple way of considering is for those clients who already got data very valuable out there who need protect, including this digital asset, right? If you have a digital wallet with tons of like Bitcoin in it, how to protect your private key. So we provide a system called Key Management System, or the product name KeyShard, using secure multi-party computing framework. So your private key will never appear real as the full private key in the network. So the sign will be computed by an MPC platform. So this is a very typical user, kind of a potential client, and all other client who has already this digital asset there, need to be protected, and those who has, I will call it an unminded hidden digital asset. For example, I was from the traditional financial industry, right? So if I have a very valuable, how to calculating present value for a structured product, very efficient, I could calculate very fast and to invest my money with a good return, but I cannot publish it. If I publish it, everyone know how to calculate, then I lost value, right? I have to hide them behind. But if you can protect by this, for example, this secure multi-party computation framework, then people can use it, but will never touch what exactly your model is or your source data is. So they could evaluate your model based on the result. They could invest, get return, and evaluate that you really have a very good model with very good quality of data. Then they will pay more money for you, which means you could get your hidden digital asset on a market and get the value changed to the real money. It's a kind of an ecosystem in a new type.
Now, so besides the I think the crypto exchanges, for example, or the guys offering digital wallets kind of service, do you envision, or maybe you're currently serving too, the so-called traditional guys, right? The JN, the Goldman of the world. So would those guys be your clients too?
Yes. So we are aiming become a data exchange market. So the blockchain will be the fundamental settlement and clearing infrastructure. So the client base will be pretty broad, including, for example, government data, like the digital government, right? Some data need to be protected. Some individual data has to be protected, including those firms who do trading with EU, for example. It has to follow this GDPR, right? All this type of business could be built up on top of this infrastructure and reshape, became a mathematically proved secure way of doing business.
Wow, this my head is hurting. Okay, all right. So maybe
we try to think big in an accurate or in a proper way, but the journey will be super tough. So that's what
I think this is great, right? Because obviously the working for governments, we often got the requests from the private sector about when do we open up more government data, right? The company registry, maybe the inland revenue, and there's just so much data, being managed by the governments. If you open them up, they will basically stimulate more usage, i.e., more innovation. But at the same time, being government, we are very cautious because obviously, I think their bridge is just, it's just something that is last thing we want to see. So maybe this is something that we have to take it offline to basically get educated more by you, James. Now, so maybe just very quickly, I'd like to pick on the brain of DC again, because again, you just shared with us about what you have done over the past few years, 200 plus projects. But then if we were to look forward, right, in the next, say, 3 years, now, so what would that be? So what kind of projects do you see on the horizon that you think are interesting with great upside? So can you share with the audience, DC?
Yeah, would love to.
Yes.
Now, as I mentioned earlier, we are focusing on 3 broader areas. Now we are the blockchain technology, as you all know, has been around for over 10 years. It's pretty much like the year 2000 of the internet. So now I see the industry is now in a transitional period from pure technology innovation to commercialization. So starting this year, we are shifting our focus a little bit from focusing purely on technology to firstly to commercialization, and secondly bringing the crypto as an assets to the mainstream. So in terms of investment selection or our target to invest, we have our own methodology, if you call it, that we are, for the past 5 years, most of the people, players in the blockchain space, are telling a technology story. Right? From this year on, people they wouldn't buy the same story for the next 10 years. So now, if you want your investors to buy your story and write a check, you have to be practical and realistic, and you can promise and overpromise 2 years ago, but now investors are being practical and they expect you to deliver your promise. So now they are focusing more to how you build a real business on top of this disruptive technology. Same here with us. We will look at the business side. What is your go-to-market strategy? What is your milestones like? What is your roadmap? How are you going to bring your products to a broader user basis? And in the end of the day, how do you make money? So that's the aspects we would consider, and the broader areas we will look at in the coming years, at least for the coming 5 to 10 years.
Great. Well, thanks, DC. Now, again, from a previous conversation with Zen, I know that DC is a great guy, and also the other colleagues of your team at DC. So I think that besides being a good guy and besides bringing the capital, Zen, I think you have some experience that perhaps you can share with the audience about how the HashKey Capital team takes care of their investees and how they basically add value and help you guys along the way. So can you elaborate a little bit more on this?
There we go. No, definitely. I think in general, Blockstack has been very careful with the investors we've chosen. Going back to Y Combinator, because we've been able and have been lucky enough to get the backing of investors like Union Square Ventures and Harvard University, I think we realize how capital is capital. In fact, we're in a world right now that is extremely capital rich. What's much more meaningful than capital is the expertise and value that the person behind it can provide to the project. I think, when we were pitching investors out here, we were very cognizant of that fact. And, I've kind of experienced the advice and help from HashKey on 2 different fronts now. First, with my work with Blockstack PBC, there I think it was really foundational to, we're a US project. Our engineering team, our initial backers, they're all from the US and Europe, but as I mentioned, this technology is global, and the markets out here, China, Hong Kong, Singapore, Korea, they're arguably the most important markets for what we're doing. HashKey was instrumental in us, first dipping our toes in the water, I guess you could call it here, building the initial developer community. And then, with all of the work I've been doing to set up the new company in Hong Kong, both DC and his colleague Ben have been, invaluable, both in terms of just, I'm new to Hong Kong, so navigating the process of setting up a company in the least painful way possible, which is, of course, interesting given the COVID times. But in addition to that, it's also, I have some of a network here, but really providing those introductions to enable you to really establish a base of business. I think those have kind of been the most important areas they've added value in, and kind of continue to this day.
Great. No, I think this is great to hear. And James, would you like to say a few words about your own experience, about how the HashKey team helped you along?
Yeah, I think thanks very much to DC. Hashkey group helping us all the time. I will say, I from now from for the future, I will say Hashkey has a very good community. Uh, One is has a very good investor group. They have vision. They understand where we are and what our value is. So that's one pretty good value. Another one, Husky Group has their exchange like Husky Pro, right? And our ecosystem, platform ecosystem, will have our own like a token. We try to adding value to the whole like ecosystem to bring value. So the token need to be traded on a licensed exchange to be a good one, right? So that will obviously will help us. And the third one I will say will be the good ecosystem need people to contribute good ideas, to contribute like good tools to build the economy together. And Hashkey community obviously has a pretty strong influence. So I'm also looking forward, I'm an IT person, so specifically I'm looking forward for influencing good developers to join our community and contribute new ideas, and we build up good ecosystem, good tools together. That will be a very good future, bright future. So I'm still looking for many helps from DC, and afterward we'll thank him face to face.
Yeah, no, this is, I think, obviously great, great feedback. And I guess for many people, I was an entrepreneur myself multiple times, and back then it wasn't, I think, such a vibrant ecosystem where you can get help so easily. So I think this is really great to hear about the help we can get from Hashkey. Now, so just now, DC, I'd like to sort of change gear back to you again. So just now, you already alluded to about your focus going forward in the next 3 years, that is no longer just about the tech, but more on the use case, commercial side. So whether or not this is something that is already something that can basically push out the market. Now, again, I had a chance to talk to some of your colleagues in China, in Wanxiang. And I understand that Wanxiang, which is an enormous group in China, with deep knowledge in the whole automotive, like trade finance, use case. So now, I guess the reason why I like to tee it up that way is that, again, I'm trying to put myself in the shoes of the audience here, is that, okay, if they are going to come to you to pitch to you to raise money, then what would be the advice that you provide to them so that they can, I guess, be more successful in the fundraising effort? So DC?
Thank you very much.
Yes.
Before I dive into the details, thank you very much, Ken, Zan, and James for promoting us among the audience. This is a good opportunity, not just because to tell all people who are already involved in the blockchain space, but also for a broader audience who have the interest to get into the space. Like I said earlier, the blockchain space is still very, very early. People have been passionate or quote unquote crazy for the past several years. If we were looking at new projects that approach us, we would adopt a more rigorous investment process and framework of valuation. Internally, we operate pretty much like a traditional VC. The process is like we do deal sourcing globally. By the way, over 50% of our portfolios are from outside of the mainland China areas. We start with deal sourcing, and then evaluate, and then do due diligence. Some of the major aspects we look at are, firstly, the team. If is the founding team has the knowledge base, the business experience, and all the resources which are necessary for their success. Secondly, we would also look at the tech, the maturity of their tech. They don't have to like reinvent the wheels. If they're using the basic tech layers like Blockstacks or Platons, that's good choice and smart choices. If they're trying to build their own system, it has to be like reliable. Besides, on top of the tech layer, we take a very practical approach to examine and verify the feasibility of their business model. What kind of users needs are they trying to address? What are their strategy to execute their business plans? And I would also like to bring to the audience or and blockchain entrepreneurs' attention is that because of the current difficult times, you might also have to watch out for your financing status. Build a long runway so you can survive the tough the difficult times, and when the time gets better, you have a better opportunity to beat your competitors and succeed. On a broader level, business success, it's not just about how good your technology is, how good your team is. It's also about timing. If you are building a WeChat or WhatsApp in early 2000, it wouldn't succeed. However excellent the team is. So when they're doing when the team is planning their product, it has to be at the right time to address the market needs. So that's all I hope to share. I'm not sure it is 100% correct, but hopefully it will be helpful for projects that are approaching us. So we are talking, we are speaking the same language.
Great. I mean, great advice. Now, first of all, I'm just trying to be conscious of time too. So for folks on the call, if you have any question that you'd like our speakers to answer directly, please feel free to type in your questions, because I'm going to ask, since DC already shared his advice, I'm going to ask Zen and James to give one advice, to the aspiring blockchain entrepreneur. So if you were to give them advice to be successful, have at least a higher chance to succeed, what would that be? Now, in the meantime, so the audience, please send in your questions, and then we can go into the Q&A after Zen and James got a chance to share their advice. So maybe we'll start with Zen again. So one advice to the audience?
Sure. Well, I think I would reiterate part of the advice I said earlier about, in this space, when you're building a product, I think you need to very carefully consider the jurisdiction you're going to be in, not just the regulations of that jurisdiction, but what that jurisdiction is going to give you access to. This technology is fundamentally global, as I've said, but we're also at a time when I think a lot of different conflicts, I think a lot of different, both kind of geopolitics and just a lot of shifts are going to happen in things like monetary policy, for instance. That directly affects the crypto space in a way that it doesn't necessarily affect a lot of the other startup areas, and obviously affects fintech to a huge degree. So with that, I think we're still at a point where, to the point I was made earlier about we're kind of at the point of commercializing this technology. I don't think you have to make things super complex. The easier access and kind of the simpler value that your product can deliver to the most people, and that last part's really the most important, since crypto up until now has been so technical and so niche. I think kind of prioritizing that is really the point where we are in terms of the evolution in the space, and where you'll kind of find success in the next 3 to 5 years.
That's great advice. There's a tagline, a commercial. It's basically like a facial product commercial. Less is more. So I think for those of you who live in Hong Kong who have seen that commercial, but it's a great wisdom. So thanks, Anne. Now, James, maybe one advice from you too before we go into Q&A.
I totally agree with Zen and DC's advice. I was set from the technical point of view. I'm kind of addicted with the blockchain technology. So blockchain has a very unique characteristic is keep innovation. So my advice will be keep innovation, thinking big picture, and get your hands dirty. Which means you keep innovate with the distributed innovation. I would say distributed innovation means a different team from different region may invent different ideas, and you could combine them together, could also got a pretty good product. And think big is to get your direction correct, but also need to be a full life circle from the regulation, from how to the commercial wise, how to pay tax, how to get the data properly without break any like policy, etc. And get hands dirty means you have to find out the real valuable pain point of the existing business and get into the very much details and get the client want to pay for you. Then you will have a relatively safe journey for your like, entrepreneur life. Thank you.
Great, thanks, James. Now, I guess I will just quickly address the questions from our audience. And I think they don't specifically point to any particular speaker. So maybe the speaker can just feel free to, I think, to speak up when you feel that the question is something you want to address. So I'll just start sequentially. Now, the first question is, if you build FinTech now, so what particular problem would you try to solve? I think it's probably a relatively general question. So I don't know, so maybe DC or anybody want to address this? Again, if you want to build a FinTech now, what problem should we go and solve at the moment? So in other words, what's the biggest pain point in the marketplace right now?
Okay, so let me try to take this one. FinTech means financial technology, right? Focus on the financial industry. If that I will see using blockchain technology or not, FinTech has a tradition like this very difficulty on the, for example, from banking point of view. That's a very simple example. If I transfer money from Thailand to India, it may go all the way around, go to New York, and then all the way around, go through 5 to 6 banks. There are anti-money laundering, there are terrorist censoring, and all these kind of policies. A different bank has a different blacklist. So how to make sure after you transfer your, for example, $10 billion, and afterwards you find out there are somewhere it hit the blacklist, then the money got frozen there, right? So that's one very simple example. On the traditional financial industries, there are a bunch of this kind of pain point outstanding there, which we could use blockchain as a trustee, use the privacy preserving computation as you share, you can find out the result or without knowing exactly the data it is. So all this kind of technology can be used for this FinTech. Also from the blockchain, very specifically from blockchain, my view on this is, one is the risk control. It's based on consensus risk control in a group of or association or whatever, in a group of financial firms. I will call it a consensus risk control model. Also a very clearly it's very good at settlement and clearing, right? So yeah, I'll just share a few my view and stop here. Back to you, King.
Okay, thank you. Now, I guess I want to perhaps go through as many. Sorry. Someone has something to say.
Can I add one point to James?
Sure. Of course.
Yeah, just what personal experience, what fintech can bring to us. One vivid example with the personal experience is in Hong Kong. No offense, and to be honest, the banking industry, the service is sometimes too slow to bear with the waiting times at some branches. One fintech company or one group of fintech companies, the virtual banks, so you don't have to go to the physical office to open your bank account. And you can do it by facial recognition, by like online QIC processes. It used to take you like hours and days to open an account, and now from a technical perspective, it's just a matter of minutes. That's what one example what a fintech can bring to us as an ordinary user. In other aspects, like in finance, you guys may know the example of Alibaba. It's a good combination of the technology and the financial services. It not just gives us the convenience and benefits of the technology, but also create new investment vehicles like the Yuebao and etc. So that's one point I would like to add to James. Back to you.
Great. Now, I guess there's another interesting question I'd like to ask our speakers. Let me just read it out. So what do you think about the digital securities tokenization status in Hong Kong? And in Europe, it is totally common, but in Hong Kong, it is still lagging. So I suppose it's the general sort of common adoption of digital or tokenized assets. So anyone want to comment on this? The status of Hong Kong versus Europe?
If I may volunteer?
Sure.
Yeah.
Yes, go ahead.
STO, securitized tokenization is a matter of regulation. In Hong Kong, if my memory is correct, last year, SEC has issued the guidance for virtual assets. That's a framework for asset managers who are dealing with crypto as an asset. It categorizes all the business types. If you're doing trading, you have to apply for license type 1 and type 7. If you are doing asset management, that's type 9. So they try to categorize the token assets or token related activities into the existing regulatory framework. And I think given the time and difficulty of having new law, this is a very practical approach. From a practical level, it's how do you find a asset that can be tokenized and can be traded under a regulatory framework. But now not much detail is given by Hong Kong's regulator. As to one example, under the current scheme, if you're holding a type 9 license, you can only hold less than 10% of your AUM of crypto assets. If your AUM exceeds 10%, what should we do? If we are managing get a license, how do we do that? We know there was one or two examples in Hong Kong, but I think the regulators it might be helpful for the community to from regulator in U.S. regulation or European regulation. If Zan, can you share your observation from the West?
Yeah, for us, I think it's been a little different in that our token's not a security, at least not in Hong Kong. So to give a little more background on our token, the Stacks token is very much a utility token. It's core to the consensus mechanism, which secures the network. It is used to execute smart contracts, used to register digital identities such as decentralized names, as well as to create NFTs or anything similarly. Everywhere outside of the US, we were able to get very comfortable with regulators that this is a utility. So from my perspective, in Hong Kong, I'm also not issuing this asset. So I'm relieved of, a lot of the burden that I think I would potentially be under. From my standpoint, what we're doing with the kind of tokens we have is, we are locking them up, basically staking them to earn Bitcoin. That's kind of a core thing of our consensus mechanism. And so with that, we have kind of no issue kind of doing those activities, as well as compensating partners as part of agreements or contractors, employees with the token. That's something I think in Europe as well, we feel fairly comfortable with. It's really just the US right now where the token itself is not a security, but because we issued it through the Regulation A+ framework, which is a securities framework, we, for the time being, have to treat the token as if it were a security. And so, yeah, so I think, there definitely are considerations in Hong Kong. I think down the road, we may look into one or two of those licenses that DC mentioned, especially maybe the asset management. But, for now, I think it's been nice about that quite as much.
Mm-hmm. Right. Well, so thank you, Zen and DC. Now, I just want to hit on a few more questions. So perhaps the next one is a pretty practical question, and that is what kind of PE multiples are we expecting in the field of industrial IoT?
I think I'll respectfully bow out of this one.
So I don't know, DC, you have any comments on this?
Sorry, I'm no expert of IoT.
Yeah. No, that's okay.
Industrial.
I just want to give it a shot. But first of all, I would think that for a lot of early stage, I don't think they have they don't have an E. So that's why P is a bit difficult to to measure. So anyway, I think the next question is probably, go ahead, DC, you have a point?
Yeah, I think if the question is about returns, there is always an early mover advantages. People back in the 2015, if they invest a little bit in a crypto space, they just leave it alone in a wallet, let it lie there, and now the returns would be, I guess, over 100 times. But that's like once in a lifetime opportunity. When the industry gets mature, the returns will be more and more like a traditional financial product. But now, if you're comparing the returns in blockchain investments and traditional investments, like say lending, equity, it is still much higher. We have a research piece on the returns in comparing crypto or blockchain and the equity or fintech companies in the US, even traditional VC, the return they outperform traditional investments. But when the crypto markets gets mature, I think the return will be not high, not as high as previous, but still much higher than now we can get from traditional investment vehicles. Sorry about the background.
Thank you. No, that's okay. Now, maybe we'll just have one last question, and that is, I don't know if this is for James. Basically, the question is, this person said that he has this engineering degree, very interested to get into fintech. So, should he or she get a fintech master or any kind of professional certificates, or does it even matter? Do you just get your hands dirty and just build the skills without any official credential?
Yeah, from my past experience, I would say to keep getting this master degrees on fintech, if there is one, will be good, right? Because fintech is kind of challenging position. You need to be innovative. You need to be regulated. So you need to get the original business model moving safely and getting more money, right? So generating more money. So that's the key for fintech, to helping the original or traditional business model to shift their shape. So it's a very broad question. So my advice will be, it doesn't matter if you keep to get the master or not. There is no professional certificates for fintech. We will, as long as I know, we are more focusing on people's capability to understand the business, dive into the very core, and be innovative, and quickly get the POC, get the model running and test it, thinking very kind of broad from the business model, from the regulation compliance, till the way of trading, way of business, and how to land it legally. So it's a very broad area, complicated. So learn more stuff is always recommended, but don't be too much concentrate on the certificates related. It's more I think the working experience and the working experience is more important to really get dirty with the real experience, real pinpoint of clients, because financial industry is always changing, especially in the cryptocurrency area. Is innovating after innovating, it's changing every day. It looks like we spend my feeling, I spent this 3 years in blockchain. It looks like I spent 10 years in the original traditional financial industry. Wow. Hope it's helped.
Yeah, no, this is great feedback. And I just want to have a quick comment and then we can wrap up today's session. Now, first of all, for those of you who are interested to get into fintech space, definitely, in fact, the Hong Kong University of Science Technology, they have been working with many stakeholders in Hong Kong, the regulators, actually with EY, they have published this manpower study. So in case you're interested, you can basically just Google HKUST manpower study. It was published about a few months ago, like back in May or something. So essentially, they are, actually to my recollection, there are already 10 programs now, the fintech programs being launched by various universities in Hong Kong. So there's a bachelor, the master, the PhD, and also the HMA, the sub-report. They also have a certification program. But to James' point, all these are relatively new. So in terms of getting a hands-on experience, there's another company which we like, is a company from sub-report, is called Accelerate, starting with an X. So they basically provide really hands-on training on like blockchain and the AI, not the academia stuff. It's real hands-on stuff that you can really get a job after you graduate from that program. So with that, I just want to thank our speakers and also thanks our audience for joining us. Again, this is a very interesting topic. I'm sure that I will reach out to speakers to pick on their brains even after this webinar. And if you have any questions that you want to get more information around the blockchain space, you may want to get in touch with DC, Zen, or James. Either find them on LinkedIn or contact us at Invest Hong Kong. We're happy to connect you with our esteemed speakers today. So with that, so thank you very much and wish you great health and stay safe. And we'll be seeing each other very soon again. So thank you very much. Goodbye.
Thank you.
Thank you, Kim. Thank you, Kim, for having us. Bye.
Yes.
Take
Thank you.
care.
Yeah. Bye bye.
Thank you. Thanks.
Bye.
Bye.